So today we heard from Adidas, who gave us their Q2 calendar update for their earnings. Now this quarter would run from April through to June. So this really encompasses that period of time that stores were closed for the COVID period. So some quite eye-wateringly bad headline numbers, but basically people were expecting this to be the case. So we heard that sales were down 34% in Q2. Adidas was down 33%, the brand. Reebok was down 42%, and that's partially due to their larger US exposure. They did better in the previous quarter because they were less exposed to Asia, and now Asia started to see a bit more of a comeback, whilst the US was a little bit slower. So Reebok have suffered a little bit there. So if we go back to the beginning of the quarter in April, 70% of their stores were closed at this period of time. Now, if we fast forward then to the end of that quarter for June, 83% of their stores were open, and they've continued to open more. They're over 90% open as of now. They noted that footfall was down in these stores that had opened, but conversion rates were up. This is because people are not just going in to browse, but they might be specifically going in to actually look to purchase something. So the people that are going into store are going in with a purpose and actually transacting. Now, if we look at the gross margins, we've seen when we talked about Puma last week, they're normally between sort of 45 and 50 something percent. The gross margin for Adidas dropped 2.4 percentage points down to 51% basically. Now, there were a couple of positive and negative pulls here. On a positive side of things, there was the favourable market mix. Now you've got more stuff being sold by themselves, DTC. Again, we've talked about this being much higher margin because they're not selling it to a wholesaler at a lower price and then passing it on. They were also able to source products cheaper as well. On the downside, the drag pulling the gross margin down was pricing, because there's still a sort of a promotional market. There's lots of discounting still going on, and there were also some currency hits as well. Remember, they're selling quite a lot of their stuff in dollars, and they actually report in euros, and their balance sheet's all in euros. So that's why you get a bit of a currency impact there as well. From a cost perspective, they managed to get their costs down because they cut back on their marketing. They weren't marketing at things like the Olympics because that wasn't happening. So any of these big events that were called off, they were saving on marketing there. But they were investing more in e-commerce for their online business. The logistic costs were actually up, and that's because more sales were going through online, which means they're having to pay to be able to deliver this stuff as opposed to people going to the stores and buying it as well. And there was also a bad debt increase. That's if they have sent a load of product out to a wholesaler and the wholesaler's gone bust. They obviously don't normally, if there's a winding up process, they don't normally see the products again. So that's sort of like a bad debt, if you like. On the online portion, they saw online increase by 93%, and it was over a third of their total business. So that explains why they've benefited, because the stores were closed, but actually that logistic cost went up, as I say, because people aren't going into the store to collect. They're actually having to, they're doing it online, so they're posting that. Geographically, as we mentioned, Greater China were obviously struggling in Q1, and they were coming out of it. So for the quarter, Greater China was flat, their performance quarter on quarter, but their exit rate, if you like, so May and June, towards the end of this quarter, they're up double digits. Percent growth. So some strong rebounds there in China. To give you an idea, for the quarter, Latin America was down 64%, emerging markets down 60%, Europe was down 40%, and North America down 38%. So that shows that time skew from Q1 in Asia. They're recovering, and then this was the real eye of the storm for the rest of the world. Inventories themselves, I mentioned about sort of stock problems with people going bust. Also, some of the wholesalers wouldn't have sold stock, so they'll send it back. Inventories were up 46%. That's partially because they'd sold less stock, but I would say there's also that return stock element as well. They did talk previously about an evergreen products, which are stuff that just don't go out of fashion. So it's plain black jogging bottoms, these sorts of things. They're just going to put them away. And they'll just bring them out in the right seasons in 2021. So that's going to be an increased inventory that's going to sit there for a bit, but that's fine. They're happy to sit on that. They've said that June and July is going to be the peak. So by the end of the year, they plan to get everything back down to where it was in previous years. They've got 1,100 factory outlets. There's also going to be lots of online pushes as well. They're talking about we're going to have Cyber Week. There's going to be Singles Day in China. So there's going to be lots of stuff going on online with regards to deals. So there's still going to be plenty of deals coming for some of that inventory that they do want to get rid of. For guidance for Q3, they're assuming no lockdown, and they're saying that things are going to be down mid to high single digits for the quarter, bearing in mind if we look at this past quarter, we've got, or we had North America down 38%, Europe down 40%. So that's still a considerable improvement. Some of the products that they mentioned, the Superstar, obviously its anniversary this year, was up 3%. That's despite this big slowdown, overall sales down 34%. So that's performed quite well. They talked about 15 million pairs of Parley trainers being sold this year. That's 5 years ago that was 0, so that's good there. Ultra Boost, they said, was the most googled running shoe, so some good performance there. The Adi Zero Runner, that sold out in 15 minutes. The Supernova, which is a more of a sort of a general run-of-the-mill trainer, an everyday running trainer, that's been very popular, and they talk about Terex 2 and some positives for outdoor as well. So lots of positive stuff there. Moving on to sort of hype, etc. The CEO, Kasper Rorsted, described the pipeline as the most exciting or the strongest that he's seen for 3 years. He was talking the Yeezy hype's going to continue. The ZX 2K 4D is going to be another strong offering. We've got the ZX 2K Boost sole that's already going to be a new lifestyle offering from them. So lots to come from that. Superstar collaboration with Ninja is coming up in the next week or so. So they talked about 150 drops coming between now and the end of the year. So there's going to be low pairs of volume. So there's going to be hype around this, but high numbers of drops, etc. So they're really sort of pushing that, and that's helping people to stay on the platforms, the online platforms, using the apps, etc. Just lastly, on the health of the company, obviously there was lots of discussions about them taking loans and not necessarily paying initially paying their rent on some of their stores in the early part of the COVID problem. And I know they backtracked and they did end up paying some of their the rents, etc. But they did take a loan from the government. Now, whilst they talked about their net debt had deteriorated on the quarter, it wasn't as bad as a lot of people thought. They have got additional financing at hand, so they've got plenty of money to be able to keep the business healthy going through this tough period. What they did gain this week as well was from the credit rating agencies, S&P and Moody's. They look at the financial health of these businesses, and they received positive ratings from these two agencies. What this allows them to do is to be able to issue bonds, etc., to raise money themselves as a firm, and the better your credit rating, the better terms you get, almost like going to a bank to get a loan personally. If you've got a bad credit rating, you're going to have to pay a lot higher amounts of interest on it. So that's a good thing there. They talked about wanting to repay these loans from the government ASAP, so it's good. And one last bit I'll leave you on is that Kasper Rorsted, the CEO, has extended his contract for another 5 years. He's a very, very good person to be running the business. He's shown he's taken it in all the right directions. So some very positive, a very positive move in the right direction for them. What did the shares do today? They closed up just under 2%. The markets themselves were lower, so they probably outperformed relative by about sort of 2.5 to 3%. Pretty solid showing. They're going in the right direction. It highlights how tough it is and how promotional, how much sale activity there is going on, but they're well geared up for the online side of things, and you know, there's a strong pipeline, so things are looking good. I will speak to you all soon. Thanks.